thank you everyone for staying back for our panel discussion, and thank you to all the esteemed speakers. First of all, sincere apologies for all the delay that's happening, and we really appreciate the patience and you all accommodating the schedule change. We of course have slightly lesser time compared to what we were expecting, but I am going to dive right into the big theme. This is a very critical theme that we are discussing here today. Right place at right ROI. We could have also called it the dream, right, for retailers. I'm going to kickstart right in from you, Bert. One big question, if you look at the last 20 stores, and if you have to give us a view, where has your ROI been the strongest? Has it been at premium malls? Is it high streets or tier 2 or tier 3 cities?
So we're only in tier 1 cities, but I think we've generally found that in markets where there's a very investor-driven real estate, like a lot of real estate purchased as investments, it's harder to justify doing dine-in, so we focus more on delivery. But I think we found Bangalore, Chennai, and Hyderabad to be really a great ROI on what we have, and we have some great properties with Brookfield and DLF also that we're getting a great ROI from.
Thank you for that. Soumya, same question to you, a view of the last 20 stores, the strongest ROI you have personally observed for the brand.
So as a brand, we were largely focused on high street to begin with. Also because malls didn't give us space, so I'm hoping after being on this panel, malls will start giving us space. And but tier 2 and tier 3 remains to be our biggest market. I think our product price proposition caters to that market the best. So that has given us the best ROI. A Jalandhar 200 square feet store gives 14 lakh of revenue, which is unheard of in retail market. So that's the kind of tier 2, tier 3 market we cater to.
Excellent. Harsh, coming to you, similar question, your view at Sold Store, the best ROI, which market, which format?
So I think I'll break up the question in a couple of parts. If you look at it from a pure ROI perspective, right, your investments are largely your capex, your inventory, and your rent deposit. The inventory is usually a function of size of store and business. So if I look at it just from a capex and a rent perspective, we've seen that the top malls and high streets, about 12 to 1400 square feet is where we are at max TD, max efficiency. So existing high streets where we have a lot of footfall for a brand like ours, which is impulse purchase driven, have done really well. I think where we've not seen the best of ROIs is in a lot of developing markets and new malls. We have sort of struggled where malls don't start with 100% occupancy. They do take time to pick up. So for us as a brand, what we've realized is no one wakes up thinking I need to buy a Batman t-shirt. But for us, if we are present where the customer already is, in an existing high street or mall which is established, those are the stores and markets which have actually done really, really well for us.
Siddhant, similar question to you, your view of the best performing stores, best performing formats here.
Yeah. So for us also, traditionally, the high street has been, if I talk about ROI, it has been the best performing. But for us, we look at ROI in a very different way. Probably will take up a lot of time if we start discussing that. But what I would like to stress is, for us, more than footfall, we tend to see frequency. Because our product is again impulsive, and we need customers to frequently visit our stores. That's where then the consumption will happen. So high street in residential areas is something that attracts us. And the last 20 stores, if I talk about, it's been spread across the country, but we've seen greater results in terms of the expected target that we had that came from high street, especially nearby residential complexes.
Interesting. I think what an interesting set of insights. Thank you very much. Nitin, I'll come to you now. We heard the brands talking about ROI. Give us a peek into your conversation with brands today. Are they more aggressive on expansion today? Are they more cautious, considering the slowdown in demand that we've noticed in the market over the last few quarters? And two-part question. And how does that ROI-driven conversation go when you're talking to a brand which already has a store or plans to open a store?
See, it's a mix. I'm not saying that way. If you look at what the expansion last year has been, it's been almost 12.5 million of leasing has happened in retail in India, out of which 27% has come down from D2C brands like Soul Store and more coming up. So it's a mixed one. Some are being easy, like we'll be a little conservative with the establishment, but there are a lot of new coming brands which are trying to move into the market, establish them out. So it's an easy one. If you have 12.5 million a year, that means we are buzzing. We cannot say we are being conservative or we are being easy on that. Out of it, 27% of that market comes from the upcoming brands. So ROI is something which you will see sooner or later. Every brand works on it and then they expand. Well, it's a mixed market. They don't, everybody applies to the developer's terms or retail. It has to be a win-win for both. Then only the agreements move happen. And if that kind of expert is happening in the country, means we're all doing good. ROIs are coming in. That's why we're expanding.
Excellent. Thank you so much for sharing that. Manish, do you second the sentiment and a peek into your conversation with brands and the big ROI question?
See, it's true that everyone looks at ROIs, right? You invest something, you want a return out of your investment. I think ROI as a subject, it sounds very interesting when you discuss ROI. When you look at someone who's really, really intelligent when you're talking about ROI. Okay, let's look at what is ROI. ROI is a factor of the right size of the store and agnostic of what format, high street malls. I think the right size and the product mix. Also, when one is deciding at where I want to open a store, or when we as developers say which store gets into which zone, which floor, it's also about understanding that which consumer is walking in. The fact is today, the way today malls are structured, there's a lot of zoning that goes behind in the malls. There is formal, casual, footwear, jewelry. All these things happen depending on mall size. So it's important to have the right product mix between the size, the product mix inside, and the right place in the mall. I think out of this, size makes really big things, because you might have opened a flagship store of say 3,000 square feet in one market, but it's not important to replicate the same format. It does not work like that. At times you want to create a bigger store, or at times you have a representation of say 1,000, 1,500. Depends on how the brand perceives itself. So I think it's a mix of multiple things, but yes, people do work around it.
Interesting. I want to shift the conversation to add an angle of online as well. If we have to measure the ROI or the success of a store, usually it was by footfall or the sales per square foot. I'll begin with you, Bert, again on this question. Today, do you also evaluate your stores based on the fulfillment efficiency, of maybe the Zomato orders or the Blinkit orders that are done through your store, right? Is that also an important metric to define the success or the, the efficiency of a store?
So I think for us, it really comes down to if we're doing a store that's not a delivery-focused store, a cloud kitchen, if you will, how much revenue are we generating from dine-in for the store? And if the rent is less than 25% of the dine-in sale in a market, it makes sense to do dine-in sale. If that rent is going to be more than that, we don't do it. And generally, we don't think too much about per square foot and all these things. It's just at a crude level, are we going to make money on doing dine-in or not? And so in the markets where I would say it's investor-driven, and particularly Delhi is the market. And I think Mumbai, we're not there yet, but I think Mumbai will be similar. Rents get bid up beyond what the capacity of the walking crowd will pay for. And so in those scenarios, we have to be more careful about what we're going to be getting out. But I think we think of ROI less at a very specific level and more at a very general level, which is, am I going to definitely make my money back in a reasonable period of time or not?
Fair point. Soumya, similar question to you.
I think our KPIs remain largely what they were. And it's not that were we able to service the order. It's more about was there any sale loss at all? Were we able to replenish the store fast enough? Were we able to save the sale that came our way? In offline, it's very important to convert the customer on the spot. There's no concept of, okay, we'll send it to your house. Maybe you can buy this instead. The entire intent is right now, what is your conversion? So that's the primary focus. And of course, how long is it taking for a store to turn profitable?
Harsh, similar question to you as well.
So I think a couple of interesting insights, right? And just to add to what both of them mentioned, one is I think brands have different sizes of stores in different stores for different reasons, right? It's not pure ROI based. Otherwise, the stores would probably only do 1,000, 1,200 square feet across the country. You will have the Bandras and Kolabas and the Khan markets of the world where either the size or the rental or both would need to be in a certain format. As a brand, we look at absolute EBITDA per month, right? If I'm looking at it from a percentage perspective, like I said, the 1,000 square foot or the 1,200 square foot store will always make more sense. But you need to have the 3,000 square foot store at a Kolaba or a Bandra because there is a certain demand which you're not able to fulfill from a smaller store. So we actually keep two very simple metrics. One is what is the absolute EBITDA per month that the store is potentially going to generate. And the second is what is our capex payback period. When we had smaller stores of about 7, 8, 900 square feet, the capex was as short as within 3 to 4 months. Now that we've moved to sort of larger 1,800, 2,000 square foot stores, the expectation is that the capex payback should happen within 6 to 12 months for most stores, and the exceptional stores will probably be about 12 to 15 months. As long as we're able to solve for these two metrics, I think then as many stores as the company can absorb is what we will open.
Excellent. I think very pointed insights. Thank you so much. Siddhant, your thoughts on the same?
So we are, of course, a offline first brand, and then we adapted to online. So for us, when we look at new stores, online also plays an important role because thanks to the food marketplaces now contributing 20 to 30%, it is very, very important to even the layout of the store, as well as there's a very, you have unlocked a sales channel. At the same time, you're also unlocking an opportunity. So let me give you an example. Let's say our store opens at 11 a.m. and shuts at midnight. Now, then you're operating offline, you're entertaining walk-in guests, and then you're, of course, doing delivery. But as soon as 12 midnight, let's say you shut the store, you have that additional 2 hours. You can still cater to online from the same store. So then the ROI completely changes because 12 hours of operation versus 2 hours of additional online. So that's another way of looking the same geographic, same location, same store. I'm getting additional 2 hours of online visibility.
Excellent. I think it's it's so exciting for brands to talk about this entirely new dimension of how stores can be more productive and how they can be used to add more revenue to the P&L without adding more cost. So it's such exciting times. Manish, I'll quickly come to you. Which cities or micro markets in India today remind you of the Bangalore or the Gurgaon that were 10 to 15 years ago? If you can give us some picture of where would you advise brands who are here with us on the stage and in the room to be ahead and invest in those markets?
So I'll give you a very quick example. Within NCR, we saw an emergence of a Gurgaon. And over the last 2-3 years, we are seeing Noida emerging as something huge. See, emergence of markets, it's very difficult to say what format fits in very well. And just to talk data points, we have a mall, 2 million square feet mall, which is Noida Mall of India. 11% of the consumer comes from satellite towns, right? So now there are two questions. One is, if there is potential in smaller towns like Meerut, Agra, where the consumers come, is there a mall potential there? Answer could be yes. The question is what format? See, the consumption of a city is also dependent on the development, urban development, and propensity of people to sell. Now, if people want to have a weekend, they might as well drop 1 hour, 1.5 hours, have a good full day at one of the malls, and then they can go back. So a city has to be self-sustainable. That's one. Second thing is, I think India is a great market. The B, as we call the B category towns, has had the immense potential. The question is, what format, which market? And I think a learning comes out of the fact that years back when malls started developing, everyone said, what's going to happen to high street? Have high streets developed, adapted? Yes, they have. South Extension has adapted to a huge wedding jewelry market. It still works. Khan market is a top dollar market. So I think markets emerge, high streets emerge, a mall format in a particular town to adapt the city and potential, the size of the format, the curation of a format. curating a mall is as much as curating a retail store where you decide men's versus ladies, western versus ethnic, top versus bottom, tees versus wovens. When we create a category mix in a store, I think a mall mix is very similar to that. The principles of retail would remain the same always. So I think emerging markets, yes, we see a lot of brands opening in a lot of malls opening in smaller towns. I think that's what it is. I mean, picking up one or two market of Jaipur or Ludhiana would be very micro to talk about it.
No, but I think great insights there. And you mentioned Khan Market, if I'm not wrong, one of the highest rentals Khan Market operates at one of the highest rentals.
Absolutely.
Yeah, interesting. Then similar question to you, which are the next upcoming markets you would advise brands?
It's not the same. One of them is which we just showcased, Kolkata, the new town. That area has been untouched. That's why we're expanding out there and opening a place out there. But every city is expanding to the seams with population here and there. If you see the city we are sitting in Mumbai today, if you go down towards Thane, the Gorbanda Road, it's going to have 3 more malls coming up because that area, what it was to a decade and a half earlier to what it is now, there's a requirement out there. The same goes for the city of Gurgaon, your Chandigarh, Mohali, your, let's say Bangalore. When you go towards Devanahalli, the area is getting filled up. So Hyderabad area, Cyber City and area, go down to Pune, Waka. So it's not emerging. It's the population expansion movement from the area, from the within the city to outskirts. So people are looking at something coming next to their house. They're not neighborhood malls. As Manish said, they could be size, could be small to big as per the requirement. But the current cities are expanding. The tier 2 cities are expanding. Tier 3, everywhere the expansion is happening up. The friends of retail would be able to build better. They do more business. But if you go down, Indore has got 4 malls now. Lucknow has 4. Chandigarh, Mohali has got 6. The Tri-City's got 1 more coming up. So it's like every city with influx, the more exposure they're getting, they're all expanding. So it's typical, not easy to pinpoint which is the right market.
I think fair point. But again, thank you so much for the insights. And I think it's a perfect note to wrap the conversation. Thank you again, everyone, for one, being very patient, and second, for being so candid and pointed. It was a short session, but I personally am so happy with the insight. Thank you again for making time. And thank you for being a patient audience.